4Q EPS, 333, fourth quarter adjusted revenue, $30.35 billion. The estimate, $30.01 billion. Managed net interest income, $13.71 billion. The estimate, $13.47. Tom, the numbers keep pouring out. The fourth quarter includes a $1.8 billion net credit reserve release firm-wide. We saw a lot of that through the last year. You're seeing more of it again this morning for the fourth quarter. Investment banking revenue, $3.21 billion. The estimate, $3.08 billion. We may hear a lot about M&A, Tom. A record year for mergers and acquisitions in many ways here in the United States of America. And IB revenue beats that bar. $3 billion the estimate, $3.2 billion the number, Tom.
I would suggest, John, that anybody with a modicum of heritage here looks at these double-digit returns, these ratios, the compare and contrast of equity, return on capital and such, and they're really something, John. That 19% statistic there on tangible equity, John Farrow, is extraordinary.
Lisa, some commentary from Jamie Dimon. The economy continues to do well despite the Omicron headwinds. So the number's decent, as widely expected.
And frankly, it'll be really interesting to hear what Jamie Dimon has to say, not only about compensation at his own firm, but about the companies they speak with and about wage inflation, which he's talked about so much, how they're dealing with this and how they're absorbing this. But these numbers look wonderful, as widely expected. Now we learn what's been baked into the share price.
Lisa, equities and sales and trading revenue comes in just a little bit lighter, $1.95 billion. The estimate here, $1.98 billion. Shonali, you've had some time to pour through this as well. What are you looking at?
Well, one of the things is not just that investment banking number. Those are really important to look at in such a competitive year, especially equities. The average loan increase. You have 6% increase in average loans. Think about that compared to last quarter. It was a 5% increase. So yes, we are seeing loans coming back, but it's not at a very fast clip yet. And that really starts to set the tone for the rest of the banks as people start to get excited about loans coming back.
Tom, you're looking at the same numbers. What do you see?
I'm looking at ratios that are jaw-dropping, and, you know, all the banks are going to vary, and Ken Leon's been great about parsing out maybe people catching up or faster movers. John, I'm going to go to the technology of the moment, and in every conversation I have, they're all focused on technology. I remember a conversation with Brian Moynihan 5 years ago on that. JPMorgan active mobile customers, John, up 11%. I mean, we live on our phones now, don't we?
And Lisa, you're looking at the deposits.
Honestly, average deposits up 17%, whereas the average loans, this is for the fourth quarter, were up just 6%. Still people stockpiling cash. How much are people drawing down their savings, if at all? This has been one of the big questions. And based on this increase in deposits, what's driving it? Is it just the ultra-wealthy trying to cash out of stocks, or is it something more?